I was so mad I was literally going to kill the dude because I had had enough. I had lost like up to that point, 2004. I was down like 1.8 million bucks or something.
People go make millions of dollars selling software. Not many people can lose it and then go get it back and then end that year profit. Like, that is crazy, bro.
Anyway, there was this one day that he did it to me again. I lost like 300 grand in 8 seconds. Right. And this is the market that made me my millions of dollars. And I don't even really like it that much. Right. Because there's so much opportunity in these other markets if you have a trade plan and a system and an edge. Right. So, when I start showing you this stuff, it'll blow your mind. If you've never seen this before, you're going to be like, wow, this is happening in every market. And I just lost $5,000 on that trade, and this was a live account. So,
what's up, traders? Welcome back to the podcast. I've got a masterclass for you today. The Bookmap wizard, Scott Pulcini, is in the house. It was a crazy podcast. He's doing the whole masterclass, and he ends up accidentally in a trade, loses $5,000. We talk about how he made millions of dollars trading ES, what it was like trading thousands of contracts a day. I mean, some of Scott's stories are incredible, and how he's now transitioned into being a scalper. And he shares a ton of valuable stuff about Bookmap. So make sure you can watch this episode. We do a lot of screen share. Like I always say, I'm going to shut up. Thank you to our sponsors. Thank you to Scott. Thank you to Bruce from Bookmap for connecting us and making this happen. And now enjoy the podcast, everybody. All right, Scott, let's get right into it, brother. Tell me a little bit about yourself if you can. I know you said born in Chicago, now in Arizona. When did you start trading? I got a little bit of your backstory from Gino and from Nick, but I want to hear it from you.
Started trading. I started trading back, investing with my grandfather back when I was a teenager. Like probably was like 14 or 15. And back then, that was everything was in the newspapers. There was no internet or anything like that. I'm talking like late 80s. So that he's the one who spurred my interest in trading, where we'd pick a stock and then watch it move over the next few days in the newspaper type of thing. And then I entered this competition in high school called the AT&T Investment Challenge, where it was kind of like a stock picking type of thing. Again, I knew nothing about futures or anything like that at the time, but I did really well in that. I think I was like top 100 or so. I can't remember exactly, but it was really, I think I was top like 0.1% or something. It was pretty much all luck, but that just fueled my drive for the markets. And then, so I went to college, and when I got out of college, I was actually going to I wanted to be in the industry, and, I didn't have any connections at the time, as far as trading firms or anything like that. This is before anything was really electronic anyway on the screen. So I signed up to be, I did an internship at Smith Barney, and then I did some internships in college too, Merrill Lynch, Smith Barney. And then when I got out of college, I did a paid internship for Smith Barney, the Sears Tower at the time, now Willis Tower. But I was going to go that route, and I just found it way too boring. Like, I wanted to be in the action. I didn't want to be pushing stocks. I wanted to be trading stocks. So it was a good introduction, but that was just not my calling. And then one of my buddies was working at the Board of Trade, got a job at the Board of Trade, and he had started out as a runner, and then he started working for a local, they would call him, where he does, it's basically guide trades for himself. And I begged him to get me down there, get a job down there. So I left the Smith Barney job, and I went down to the Board of Trade, making a whopping $200 a week as a runner, the lowest of the low on the totem pole, right? Just running order sheets back and forth.
What year is this now, Scott?
This was 1997 ish. So
it's crazy to think about that with inflation and everything now, right?
Right. It was rock bottom. Trust me.
If you're tired of wasting money and time on sim funding challenges, Top One Trader has an offer for you. They now have instant funding accounts, which means you can start trading towards a payout today with no challenge and no waiting. It's an incredible offer. As long as you follow the consistency rule, you can be eligible for a payout in your first week of trading, if you take advantage of some of the unique offers that Top One has, like their instant payout add-on. Now, if you go back to episode 147, I interview a guy named Derek. He made over $100,000 with Top One last year. He shares his experience with Top One as a firm in detail in that podcast episode. So definitely check that out if you want to learn a little bit more about what traders are saying having traded with Top One. Their customer support we know is top notch. We know that they are paying people out with no issues. So to me, them getting in the instant funded game was a no-brainer. So check it out. Thank you to Top One. Happy trading. If you're serious about taking your trading to the next level in 2025, you need to be tracking your trades the right way. Most traders don't struggle because of lack of skill. It's because they lack data-based insights on their own performance. And that's where TradeZella comes in. You're going to be able to see strengths and weaknesses, see what's working well for you, see what you're not doing well. And then you're going to be able to double down on what's actually working by identifying your most profitable setups. You're going to be able to review and detail each trade with precision. And that's going to help you identify new patterns and make more money. I've been using TradeZella for the last 3 years. Everybody that we send to them absolutely loves them. So use the code ASFX10 for 10% off your monthly, or the better deal, use the code ASFX20 to save 20% on your yearly membership. Good luck and happy trading. Every trader is searching for an edge, but edge is not found, it's built. With Edgeful, we don't trade blindly. We trade with precision, we trade with confidence, and with data. We use Edgeful every single day on ASFX TV. The reports are constantly evolving, and the stats are coming in and out of play every single week. That's why having Edgeful is a must in my daily trading tool belt. One of my favorite reports is the classic gap fill report. This report is actually what inspired the entire company. Andre, the CEO founder, he actually talks about that on a podcast episode when I had him on the show a few weeks ago. If you don't know what the gap fill is, that's okay. Edgeful actually explains that to you as well. So if you're looking for an edge and you want to stop guessing, maybe you want to actually start executing some winning trades, give Edgeful a shot. There's a link down below for you to check them out. Sign up. You won't regret it.
Rock bottom pay. So I did that, but I mean, I loved it, right? I was down on the floor of the board of trade, and I was in the 5-year options pit. I knew nothing about options at the time, but I didn't really need to. And then I worked my way up into becoming an ARB clerk, where, like in trading places, most people don't know what that is, but the guys that flash the hand signals, and very, very stressful job. But I worked. That's the whole goal. When you get down there, you want to make it to ARB clerk, and then hopefully eventually a trader. And I was doing that, and then I went from the 5-year option pit to the 30-year bonds, and that was the big leagues. That was the big leagues at the time. Again, none of this stuff was on the screen yet, or it was just starting to get on the screen. And I went to work for a broker, and that's where I would tell Dr. Brett Steenbarger, he actually wrote Enhancing Trader Performance. This quote's in there too, like trading on the screen is like a massage parlor versus being in the pits, getting these orders thrown at you with the hand signals, and you make one mistake, you blow your broker out, you cost them hundreds of thousands of dollars on the spot. So
crazy.
And the thing is too, the guys that flash the hand signals had to be all cool and, do it with their own flair, as fast as they can. It was just,
of course.
Yeah. So it was the stress level was beyond belief. Especially me too, because I'm colorblind too. So I had a hard time picking up the hand signals. It was a pretty brutal job as far as stress, but it got me battle tested. So then when I started, trading on the screen, I didn't panic per se when markets would be ripping against me and that type of thing. So
yeah.
So I did that for about 4 years. I was at the Chicago Board of Trade, and then the same guy that actually got me a job at the Board of Trade started. There was another guy at the Board of Trade who started his own trading firm just with a couple guys. It was called King's Tree Trading in Chicago. And he brought a couple guys that he knew from the floor, and they started trading on the screen. And back then it was the Wild West. There was no education anywhere. It was, like the day I started, they put me in front of a screen and said, here are the couple markets we're trading, see if you can see something and figure it out. That was it. Right. So I like to tell the story. The first day, my very first day, I lost $2,500 trading one lot in the E-mini S&P, and it wasn't even swing trading. I was scalping in and out. So you can imagine how hard that is to do at $12.50 a tick. How many times you have to lose that kind of money. So I almost got fired my very first day, right? So it was like, that's how I started. And then I went, the next 2 months, every single day I lost, like every single day. I didn't have one winning day. About to get fired. And then I went away on a fishing trip with the same guy that got me the jobs. And he recommended I read Reminiscences of a Stock Operator. And I read that. And I came back with a clear head. And right when I came back, that's when 9/11 happened. So they shut down the markets. And I wanted to learn how to trade. They shut down the U.S. markets for a week, the futures markets, stock markets. And The only thing was trading at the time was the European markets, like the DAX, German DAX, and things like that. So I started coming in the middle of the night to just try to figure something out before I got fired. Right? I was like, I got to figure something out when this thing picks back up. So I started seeing patterns and tendencies in the DAX futures, and that's how I pretty much got my start of making money. And then when the mini S&P opened back up, I started to apply the things that I was seeing in there to the mini, and then just overnight it just clicked, and I literally just took off, started making money every day. Relatively not a ton, but I had confidence enough that I had figured it out at the time that I wanted the owner of the trading firm. Remind you, I was about to get fired. A month earlier, not even a month earlier, he was about to fire me. I walk in his office, and I finally just started making money every day. And I made him a bet that I would be this top trader at the firm the following year. And he was like, "This is the easiest money I've ever made. Like you're making money now, but you're making $500 a day or $1,000 a day. It doesn't seem like a lot. It's a lot in relative terms of trading. That's not a lot. The top trader the year before had made $2.3 million or something. So I was going in there making $500 a day, so certain that I had figured it out. That kind of conviction that I made him the bet, and that was 2002. And lo and behold, I did it. 2002, I think I made 2.4 million, and that was I knocked him off his throne. His name was the Big Cheese at the time, and knocked him off the throne, and then I was a top trader at the firm.
Amazing. And then fast forward, if you could, top trader at the firm. Now you're trading from home, running things on your own, basically not doing anything with a firm, correct?
I have joined up with a firm very recently, as far as they're trying to automate some of my stuff. And cool. I'm also trading by hand a couple of the strategies. So I have a bunch of different strategies. Maybe we'll show them, as the webinar goes on. But I have different strategies. Basically, everything I do is based on volume. It's volume driven. What I'm looking at is unique as far as the CME MBO data that generates these stop iceberg areas, which is the most powerful edge I've ever seen in my trading career. So I used to average 50,000 contracts a day round trips. And that's back when the mini S&P was only trading 500,000, right? So I was 10% of the world volume every day. So you can imagine the amount of volume order flow that I've seen in my life, right? So for me to say, that's why I try to stress to traders, for me to say this is the most powerful edge I've ever seen, you may want to listen to me, right? It's not, I don't talk about my prior days like glory days, right? It's like, in this business, it's what have you done for me lately? And I'm a great story too, because I went from rags to riches back to rags, because we haven't even got into the lean times when what I did just stopped working. But my point is, the stuff that I'm looking at now is the absolute driver of these markets, as far as understanding these areas and how the markets move away and come back. And so we have strategies based on these volume events that I teach in my trade room, and I teach to other traders and mentoring and so on and so forth. And I trade for myself too. So it's been a long road back. I spent years and years and years trying to reinvent my style. This is way before Bookmap. And then I can get into how I got introduced to Bookmap. The edge I have now is I haven't seen anything better. And I've
impressive.
Searched for 20 years.
I was going to say, someone that's been in the market as long as you, that's pretty crazy to hear them say that.
Right.
Before we go into that, what's changed maybe about your edge since, 20 years ago? Because I'm sure technology has changed basically everything, right? Like nothing is probably the same. Because back in the day when you're doing the hand signals, you're not knowing the volume, are you? You weren't doing the same kind of thing you were doing now. You couldn't see big players coming in and out of the market, right? You were the big player. So it's just different, right?
Well, the hand signals when I was just a clerk. I wasn't even trading for myself. That was when I was at the board of trade. When I went to the trading firm, all I was staring at was the dome, depth of market, right? The order book. That's all I was looking at. I didn't have charts up at the time. That's another thing I stress to traders too. The simpler you can make your trading, the better you're going to do, as far as I'm concerned, right? So it doesn't get simpler than just staring at an order book, right? Watching the orders come in. So I was able to figure out these patterns with these orders and the big money and where you were in the queue, back first in, first out type of thing. And I figured out an edge, right? So, but yeah, you can see big orders come in, and you can see them buying orders, and and then you jump on you could see them the big money. And back then too, this was a huge edge back in the day, and that's why they got rid of it. Of course, you could see counterparty back then, so you can see who you were trading against, right?
Really,
obviously, very very important as the bigger you get, because if I jump up and I wanted to sell 500 or 1,000 E-mini S&Ps and I hit a bid and I see it's just a local that I know their trading firm number, right? The big one that I was always against back then was Gelber, right? So they were 910 and anyone who traded back then knows exactly what I'm talking about because they had this big trader, and we can get into that later. But the point is, if I would hit it and I'd see it would be a local, like just a guy like me, I know I can kind of push him around. I know he only has a certain amount of contracts he could put on. And it was like a poker game every day. But there are other times where I would turn around and sell that 500 or 1,000 lot. And it was a house I never saw before. And I'd be like, yeah, I better not mess around here. This is probably some huge money that needs to get their business done. I do not want to be messing around. Then I get out of the trade. So you can see who you were trading with back then, which was a huge advantage. And they, you can imagine the big money didn't want that information out there. They didn't want. I mean, again, this is all a guess, but I know that's what happened because I heard back then I was in the middle of it. Right, I was one of the biggest traders on the planet as far as volume. So I got wind that there were enough traders, big firms complaining that people can see their, they could see who they were trading with, and it's a huge advantage. So that all of a sudden it went anonymous, so you couldn't see who you were trading with anymore. But yeah, I mean, it's all about adapting to the markets as they change, and they always change. I mean, I hope this will be around forever. It probably won't, but it's been around for 8 years, right? And I wish I would have got a hold of it a lot earlier, where I actually had some money to trade. After my rags to riches to rags story, but it's still, I get that question all the time. Well, do you think they're going to take it away? I don't know for sure. I'm not the CME, but I think they're too far down the line. It would look real shady and suspicious because I know to this, just like how big firms were complaining about the counterparty information. I'm sure they're complaining that you can see their iceberg orders in here. So that people that don't know what iceberg orders, they're just hidden orders in the order book. They only have to display a certain portion, so like a tip of an iceberg. So if they have 1,000 lot to buy, they have to only show 100 in the order book. And then when that 100 lot is sold into, the rest of it appears right out of nowhere. So they're doing that for a reason, because they don't want to get their orders front run, right? They don't want to put in, they put in 1,000 lot, these algos will run it away from them, trying to get them to chase the order. So the point is, they're not happy that people can see where their icebergs are. That's what I'll show you, if we look at it. But they can't be happy. So I'm sure that CME's gotten some flack
right, from the big guys. Can you give clarity for people? Like, the listeners hear big money all the time. You have the experience. What is that? Is that firms running algos most of the time? Like, in today's day and age, it's either some type of, it could be a big pension fund, it could be a hedge fund, it could be a family office, it could just be a guy like you, and they're running algos. When you talk about big money, is that what you guys are referring to?
Yeah, I mean, big money is obviously algos too. You have to have money behind you to trade that kind of frequency, right? That's what I call high frequency trading. But when I refer to the big money, I refer to the traders, the firms that have to get business done. They don't care. They're just they care about price. That's why they have icebergs. But they need to get their stuff done, and they're huge, right? So that's another great view of whether the big money is participating or not, is the relative volume, right? So I look at a 30-day backlook of 30 days for the exact 5-minute period. Like right now, there's some news, whatever this news was coming in, one of these bars in the middle of the day was 400% higher than normal, right? In the NASDAQ and in the ES was like 5 or 6 times. That's big money dumping in the market, right? And when you see that, you do not want to, so for certain strategies that we have, you don't want to be playing fades against the move. You want to either go with the move or get the hell out of the way, because
get out of the way, right?
Right. So it's really important to know. But when I say big money, I'm talking about these big firms that have to unload their contracts in the market, or get in or get out.
Sure.
With size.
Is it crazy to think that the idea of an iceberg should almost be illegal? Like, the fact that they can only show you 100 of the 1,000, that in and of itself is kind of shady. Am I wrong?
No, I agree. Absolutely. But this is why I think it's my opinion, that I think the CME threw the retail trader a bone, because this happened in about early 2017-ish, I think it was, that they came out with this enhanced data, as they call it. And back then, that's when the retail trader was really, really dying, right? Like, there was no, it was like they were dying, and it was shark eat shark. So it was like big firm versus big firm, algo versus algo. And they know their main food supply is the retail trader. I think that's another reason why they agreed to let these icebergs be seen, because it's like, okay, it's a give and take. Yeah, they can say our icebergs, but we get to kind of gobble up the retail trader, there's going to be more guys in there that think they know what they're looking at, type of thing.
100%. 100%. Love that. Great tip. Before we get into the screen share, and you can present it whenever you're ready, Scott, at the bottom. Talk to us about like lifestyle for a second. What's your day-to-day like? I'm sure people want to know, a guy that's traded the markets as long as you. What's your day-to-day like? Why'd you move to Arizona? You like that time zone for trading? Give us just some insights on the lifestyle of somebody who's working the markets every day for the last couple of decades.
Right. Yeah, I absolutely don't like the time zone change.
I can't imagine you do.
I'm up like at 4:45 especially when they do the time change. You know, when they do the
daylight savings. Oh my
and,
God!
Yeah,
right.
Hopefully
that's coming up this week.
Right. Exactly. But then it actually goes back to normal. So I'll only be, or actually no.
Right.
No, yeah, it does
go going forward this week.
Right. So actually, it's not normal. It'll be 2 hours ahead, right? Yeah, that's when I get actually absolutely pummeled. Right. So it's like it's 2 hours different. It's brutal. But you know, I love the weather. I lived in Chicago for 40 plus years, and I can't do that weather or traffic thing anymore. So I love trading out here. But so my day starts around 4:45. I have my own trade room, so I can show the stuff to you that I get up and do. Like I set up these inflection zones, so it kind of shows and I'm watching multiple markets, and I'll show you, on the screen share. Let me actually bring this up. So many traders are doing a disservice to themselves if they have, kind of what I'm looking at by just staring at the crappy E-mini S&P all day long, right? And this is the market that made me my millions of dollars, and I don't even really like it that much, right? Because there's so much opportunity in these other markets if you have a trade plan and a system and an edge, right? So, when I start showing you this stuff, it'll blow your mind. If you've never seen this before, you're going to be like, wow, this is happening in every market. I don't really need to, the market doesn't matter. It's the pattern behind the market, right? So like this is NASDAQ today. So again, like for instance, on this move down, I took a beating on this trade because the relative volume. So we have different trades that I take. One of them, we'll get into, these are these GEX levels where I jump in if I see certain types of orders at the GEX levels looking for the dealer response. But, I myself got run over on this, and it was my own fault because I wasn't looking at the right chart. And because I heard it, I think it was this guy right here. There was a sell stop run into this GEX level, and I just jumped into the thing.
Because you're trading everything, just for everybody that's listening. I know Scott from the guys that are working. Right. You're looking at every asset. You're looking at oil. You're looking at NASDAQ. You're looking at ES. You look at everything, right?
Right. So, I understand most traders don't have the same type of bandwidth. So my gift was obviously I process information very, very quickly. That's why I was able to be such a big scalper and a successful scalper, because I just process things quickly. Some people don't. Some people can't look at 13 markets like I'm looking at, right? But you can, especially once you understand what's going on in here. And again, this chart probably looks ridiculous to most traders. Once you understand what this is, it's not a big deal. It's not rocket science, right? And if you can add, 2, 3, 4, 5 different markets that you're looking for these volume events in, now you're expanding your opportunity instead of just staring at ES like right now, spinning in place. You can hear in the background. I can't control that, by the way. That's why I'm not turning that down. But you can hear like there's stuff firing off in grains, there's stuff firing off in soybeans, soy oil, bonds, copper. So I can show you every one of these markets with these volume events. That's what I call them, right? The stops of the icebergs. There hasn't been much in silver or copper today, but like soy oil.
I think that's super interesting. I think the listeners are going to hear that and be like, so you're saying, Scott, these volume events are happening in every single market. Absolutely. Throughout the entire day. So to my lifestyle and time of day question, just before we get into the too deep here, high level, do you stop trading at a certain time, Scott? Or are you going all day? Market open, market close, let's rock.
This is actually a funny story too. So I preach to my room all the time that, between the hours of 10:30 and 12:30 Central, I would have to literally back in the day physically leave the office because I lost so much money, and it continues to this day. Like, you'll get these spurts like today where there's actually a lot of activity coming through the markets. Sure. But for the most part, right around 10:30 Central to 12:30. So 10:30 is when New York starts to go to lunch. Then Chicago goes to lunch. And then the algos just start playing their games and whipsawing traders to death, right? So this is exactly what it looks like. Gold hasn't really reacted whatever the news was out. But, that's what you get at that time of day. And then as they come back,
mean that, right? Just for the listeners, everybody, he says the algos are doing that intentionally to whipsaw the retail. You mean that's really what they're doing? The big traders have walked away. The volume events have happened. They're going to just take your money now.
Absolutely. So they can see. Interesting. So this subchart is showing this activity that's drawn on the chart, these zones. That these are the stops and icebergs I'm talking about. So these algos can see just like we can see these other firms when nothing's going on. Okay, it's time. It's go time. Let's start whipsawing traders to death. And that's how they make their money. Like people don't believe that's what's going on. It's a zero sum game. It's exactly what's going on. They are trying to take the retail traders' money. That's how they survive, right? So, and another great way to see the algos in play is when you look at a heat map like this, when it looks like a Christmas tree with all these different colors. All these are order book values or quantities getting put in and pulled. So the darker red it gets, it's more size, and then lighter. And then you can see like there was that new, whatever that news was, they pulled
everything off,
right, and then they're putting it back in. So you can just tell by the look of the market when you're probably going to get algo to death, where you're going to start to whipsaw things, because that's what they're built on. They're built on whipsawing traders back and forth. So that's another thing too that I preach. These traders that love to put on position trades and looking for the bigger move, and they start to get them run, and they're like, okay, here's my stop. I'm gonna move my stop to break even now. So even if this market comes back, I'm not going to lose any money. That's exactly what they know that traders are going to do. They stop you out, and then the market will, then every trader knows this that is listening to this. You get stopped out, and then an hour later, the market's 300 ticks higher, and you're about to jump off a building, right? So it's like they know what they're doing. They know how traders trade. So that's another thing we can get into is the trailing on the stop nonsense in random areas, right? I don't trail my stops to random areas. I trail my stops based on something that's happening in the market, right? Random areas meaning my break-even point. You know what I'm saying? So if I have a trade on and I'm moving my stop to break even, that's I'm imposing my will on the market. Market doesn't care where my break-even is, right? Market cares about things that are happening in the market. So that's how I trail my stops.
Great point. Now, you said you stopped trading. Do you come back and trade power hour? Do you try to get back for the close, or are you off the desk, call it a day?
Oh, no. I trade live from my trade room. I get on right around a little after 8 o'clock Central, and I trade to about 9:30 Central, and then I come back for the last hour. I'll trade live for that. So I do 2 webinars a day most days.
That's awesome.
Yeah.
That's awesome. Awesome. Okay, so now talk to me about GEX levels, because I think to understand this, and before we get too deep into the stops and the icebergs, there's levels moving across your screen that everybody can see. What is a GEX level?
So a GEX level, I'll preface this by saying I am no options expert, right? I'm getting better and better at understanding. So following Spot Gamma and Brentford Spot Gamma, actually I'm doing a webinar with him. I think he's going to hop on my Bookmap webinar on Thursday. If you guys are on there, it's a free webinar. Go to the Bookmap YouTube. But he's the expert, and the options activity is a whole different way of looking at the market. So it's not just GEX levels, right? It's the hero, right? So this is his indicator. Again, I'm not affiliated with this company, but stuff is very important to understand the real time options flow. And going back to the 10:30 to 12:30 thing, where I was telling you I'll go start playing the games, the newest game in town, and again, I'm privy to most of the games because that's pretty much how I got knocked out of the business back in the day. Was there was one huge trader, and the minute that the big money went to lunch, he would just start whipsawing the market around. This is before the algos, right? This was just this guy playing these games with the market, and he was doing some shady stuff. Like back then, you could spoof and things like that, but he was like crossing his own orders, making it look like the market was doing something just because he was buying or selling from it. It was brutal. I complained to the scene many times, but my point is, nowadays, and today is a different story because something came out, heavy relative volume. But like on a dead day, the new game in town is all of a sudden. And actually, I wish I knew about this game back in the day because I probably would have done the same thing, right? So it's like, say I'm out of bullets in the mini S&P futures. Back in my heyday, I could put up to 3,000 contracts, right? So say I'm like out of contracts and I'm fully loaded long, and I'm like just sitting here and the market's kind of spinning around. I'm like, I don't know. I can't defend because that was one of my games too. If I ever had 3,000 contracts on, it was never usually a good sign because I was like kind of defending. So I would like buy and it would go against me, and I buy some more and I buy some more, just trying to hold the market up, right? But my point is the game today is when it dies down, then these guys, whoever the guys are, and they're out there, they start to load up the options dealers, right? So this is what I'm colorblind, so gray or green line this is. So the options dealers get loaded up, right? So they start buying calls or selling puts, buying calls. These dealers have to turn around, and they are not directional traders. They are hedgers. They have to hedge their position. How do they hedge their positions? They come in and buy the futures. So the new game in town is right around that time of day, 10:30 to 12:30. You'll see the hero, that's this line here. It'll just start ripping. So according to Brett, 1 billion notional is a big move. As a lot of options that are being traded. You'll see this ridiculous like go from negative 1.6 billion to plus 2 billion, and the even the S&P rips like 40 points, right? So that's the newest game in town when nothing's going on. I mean, the hero flow still comes in all day, but my point is that's a way that these newer minded traders are the big guys are manipulating the markets, because so instead of them having to buy the futures, they have the dealers buy the futures, right? So they just have to buy the corresponding calls, and they load up the dealers, and then it's game on. It's unbelievable. And the more I had no idea. Like, I understood options flow was in the markets, but I never knew how important it really is.
Do you think options is now almost dictating futures flow? Like, is almost options controlling the overall market?
Well, it is.
So much volume in options?
Right. Well, this is where I get into it with Brent a little bit, because of course he's all about options. It's this whole, like, everything in his mind is options flow. And I agree, but at some point, but there's other times like this afternoon, right? When you look at this heavy relative volume here coming in the market, like, I don't care what the dealers are doing. This is big money unloading. They're going to these options dealers. It doesn't matter what they're doing. I can't get my right color here. Here we go. So these things, right? So, like, for instance, look at this, the Russell, like, you had 8 times normal volume. This is the middle of the day. So yes, they are, and this is what I always stress too. The options dealers are one entity in here. They are not the entire market. At certain times a day or certain days, yes, they are very controlling, because these dealers have to hedge. So if they get loaded up, they have to come into the market. But they're not the only controlling force in the market. They're just one player. But it would behoove you to know what they're doing, especially when you start getting notional moves, or when you come in, and that's what your original question was, when you come down to these, like you can see ES here bounced off this GEX level. Because all this is showing you, I mean, look how well this thing bounced off put support. So this wasn't one of my strategies. I didn't get a volume event here, which I'll get into. But you can see it came down here and just ripped, 25 straight points off of there. So the point is, when you get to these areas, the dealers are going to be hedging. They have to hedge. So all these GEX levels are, now this is Mentor Q. So I'm looking at, so these are spot gammas over here in the cloud notes, right? And then you got the Mentor Q levels as well. So Mentor Q is the newest one, and I love them as well. I've done a couple webinars with them too. If you go to my website, scalpingtrader.com, go scroll down the bottom, you can see one of the more recent ones I did with them. But they have these GEX levels for these products as well. Why I love Mentor Q is, I get them for, you can see all these different. So these are just different levels of gamma, meaning the lower the level, like that's the GEX 3.
Yes.
Blind spot.
So a GEX level corresponds to options activity. The GEX levels have to do
the more gamma is in that area, right? And the better way to look at this, just because, again, I'm not an options expert, but if you go, they even have this on the Discord. So if you go to their, let me see if I can remember to do this GEX level. Let's go. We'll use NQ.
Oh, that's cool.
Looks like, right, there you go. So this is what you're looking at on the chart there, right? So the more gamma, it's just the more exposure the dealer has. So when the market runs into these areas, it reacts because the dealers have to hedge. So that, again, is a simplistic way of looking at it. And remember how I said simple is the best way to trade. So I don't need to know, like, Brent is a very, very smart guy. Like off the chart smart, right? And most traders, the smarter they are, to tell you the truth, the worse they do, because they need a reason for everything that happens in the market.
I totally agree.
And they
agree. You overthink it, right?
They overthink it, and they have to add in 85 things, and they have to know exactly why it did everything that it did. So even if you are smart, be smart enough to dumb it down a little bit, where you don't need to know everything. But the point is, he'll go down these rabbit holes. So I read his he does a morning note every day, and it'll be awesome, because he makes certain calls that, based on when I see his stuff materializing, the options with my stuff that I look at with, like, market structure, then it's like, go to, I know my guess or my thesis for the day is correct. But then he'll start going down the rabbit hole with single stocks, stuff like that. It's like I just literally tell my room, I'm like, okay, this is rabbit hole. I don't even want to read it, because you're
an index guy. No, you're not going to worry about the individual stocks. Right. And if you do individual stocks on Bookmap, it can get very deep too, very quickly. And then overlaying options on top of individual stocks, I could imagine it gets very hairy. Right. On these trades, you did say something interesting. So you're a quick decision maker. That's one of your strengths. some people, new traders, struggle to know where they fit into trading. But as futures traders, you're really either going to be a fast decision maker like you. Like, I'm curious to know what your average trade time is. I'm going to guess it's maybe a minute to 5 minutes. But to be a futures trader, you really can't be too long-term of a decision maker, right? Especially for people that are trying to be out of their trades at the end of the day. So if you were giving advice to a new trader, how would you tell them to figure out if they could be a scalper or if they should maybe try swing trading with something different? How did you know that?
Well, I knew it because I'm like 99% of other traders. Most traders are not mentally built for position trading, right? You have to condition yourself. There are very few traders that feel comfortable on putting on a long and then watching it come back 84 times on you before it finally goes. And that's how most trades are.
Sure.
Yeah, once in a while, you'll catch one that rips off the page, but most of the time, this is what you're going to get. So most traders are not natural born position traders, right? So the reason I was a scalper is because I couldn't stand this activity like most traders, right? But in this day and age, and we do have some scalp trades that I'll show you, these reversion trades that we do that are more scalps. But the majority of my trading, and you can see here, so these are all my strategies that I take in my trading room, right? So these are all strategies that I built up in my brain over 25 years, things that I see work. So you can see the very first thing. So these have been added as I've gone along in the room, giving people all these different types of trades. They're more position trading strategies because you can't unless, again, I was one of the fastest clickers on the planet at one time. I was one of the best scalpers in the world. I can't even do it. You don't think to this day, if I was able to sit here and click a mouse and stare at this and make millions of dollars like I used to, don't you think I'd be doing it? So,
and is it because of the algos? They've changed the game?
I was one of the fastest in the world, but I wasn't as fast as a computer.
You were the algo until the algos
came in, and that they started to take hold of the market around 2005, 2006, and that's exactly when I did the nosedive, where I went from making millions to I could make $1 overnight, right? So my point is that so many traders today want to try to trade off the dome depth of market, and that's the order book. It's like, good luck, man. I'm not saying there's not like some exceptional dude out there that can maybe do it. But like I said,
the edge is hard to find. The edge is not clearly seen there.
You can't talk about fast mental processing. Again, you probably have to have a computer inserted in your brain to be able to compete with these algos, right?
Sure. So it's ridiculous.
The point is, you need to be more of a position trading type of trader for most methods because you can't compete with these computers flipping things back.
Absolutely.
Right.
So now, can you give a time frame to position trading? What will that look like? What's an average trade for you? Maybe show us something today. I know you were probably firing something today.
Yeah. So I was short earlier. So that was a couple of these strategies here. So again,
I can give you my trade too if you want to even analyze my short today on ES too. So you could break it down and tell me what you like and what you don't like. Rip me up a little bit in front of everybody.
This is another great thing about what I'm doing too. So if I don't, remember I told you how the volume events are the most powerful thing I've ever seen. If I don't get a volume event in the market, I'm not trading it. I don't care, right? So because
that's your edge.
That's my edge. I sit back like a sniper and I wait and I wait and I wait. So there was nothing in ES early morning, but there was, and I took these trades on my AM webinar, my trade room. The very first one was called an IZZY trade, so inflection zone trade. So that's this here, right? So this is the thing about these positions trading strategies. All these are my important areas that I look for a volume event, right? So that's the strategy. So an inflection zone trade is I was looking for a certain volume event to happen in an inflection zone. So if you go up here, this was literally right into the open here. So there was a buy stop run. Another thing you need to understand is like the nature of these things, right? So buy stop runs are usually retail trader puking, right? So it's not usually an initiative buying. So right away, you're already thinking, okay, I want to fade this area because it's not real buying. It's just guys puking, and you can see that. You can't really see the spike there on the sub chart, but that's all that zone is doing, right? So I already know in my mind, we call it, so I have distinct names for each one of these setups too. This is the dumb and dumber, right? So they're all funny names, memorable names. Like it's the dumb money. And mind you, I am the dumb money now too. I'm not the $1 million trader anymore. So the dumb money is the retail trader. So you get the dumb money puke. You can see here, it was right around 262 contracts. Literally, that was the end of the move for the entire day, right? We've sold off since then. So I have a trade. So this was this morning at about, it was into this zone right here, right? So this is my inflection zone. So these are zones that I draw based on the 4 important areas of charting, right? So it's tops and bottoms of balance areas. So balance areas just for this two-sided trade, right? It's the simplest thing you can see on a chart. It's just or people like to call them ranges, right? So when you
Mhm.
get this, the longer you get it, the more powerful it is because it's just traders placing bets. And when it moves out of there, somebody's right, somebody's wrong. That's where you get your big moves, right? So
Yep.
anyway, I draw these zones based on tops and bottoms of balance areas, high volume nodes of balance areas, and that's usually the center of a balance area where the most trade occurred in that balance area. And then directional conviction, and then buying and selling tails. So you can see today, tails are very important because it's instant reaction in an area. It gives you a lot of information. So this was the inflection zone. Step one, my important area. I got my volume event. That was that buy stop run. So I jumped into this trade the minute it started to break from the zone right here on my trade room, and I rode that down. Then we had other trades that materialized called the bark and the lick, right? So this used to be called barf, but we changed it to bark. So what's a bark? So remember I said I'm looking for trades in important areas or these volume events in important areas, right? Well, this wasn't an important area to go short per se, but it followed the pattern that so many of these do. It happened. The pattern happens so much. We actually have a trade for it called a reversion trade back to the zone. But the pattern for the bark is you wait for the ATR move, and ATR is so important in anybody's trading. If you're not using an ATR, you're just trading static. If you're just using static, that's another huge fallacy that traders make, right? Or mistaken traders make, where they're like, when I trade the Nasdaq, I love to risk 10 to make 20. It's like, great, trade 10 points on a day. The ATR is 12. Great. Today, when the ATR is 46 and you put in a trade risking 10 point, you're going to get stopped out of probably 99% of your trades, right? Just a random movement, because this is showing me every 5 minutes the Nasdaq is rotating 46 full points. So
Yep.
the static thing is that's just not the right. You need to know the ATR. So anyway, back to this pattern with these volume events fired off, and this was a Dumb and Dumber. I didn't get a chance. I mean, this was, I'm sorry, a double whammy. So what's a double whammy? When a market moves into an area and you get the buy ice, so that's the big money, the smart money, and then the dumb money puke into the waiting hands of the buy ice. Normally, this inherently is a bullish event because again, the dumb money puke is usually a fade, and then you get the
And
big money.
the
You're
big
like,
money stepped in, right? That's why didn't it bounce?
right. So, but that exactly why didn't it bounce? I have no idea, but it didn't. And that tells me, because this is inherently a bullish setup, once this breaks, watch out below. And that's exactly
Right.
what happened. So
And
I
it
go over
puked.
this. I have a trading course that I talk about all these things, all these situations. But the point is, when you see a double whammy break, there's something wrong, right? Because it should have been a bullish event, right? Like 75% of the time, this thing rips off the page the other way. So that already was telling me something was up. And how do I determine that? Well, I determine how these are bullish or bearish events if they can push the 5-minute ATR. That's that blue line. If it has enough strength to push the 5-minute ATR out of the area, that's telling me it has a much more higher tendency to go lower than go higher, right? So
Yeah.
the pattern for the bark is wait for the ATR, wait for the retest of the zone, and then you get in the trade. So I was taking some Gex level trades here. We'll get into those if you want to. But anyway, my position trading, I went short on my webinar, and I caught this move all the way down. So it's just based on volume coming into the market at my important areas. And the volume is the most important thing you can ever look at because it's what drives markets. So again, I'm not saying traders can't make money without looking at volume. I'm saying you don't have all the information, right? And if you knew how to look at the volume, now if you have an edge without looking at volume, you add these volume events and understand how they trade around. Now you're going to increase your edge 10 times what it really is, right? Or what you're already
Sure.
at,
100%.
in my opinion.
100%. Let me ask you a personal question for myself. When I look at the market, I'm looking at ES on Bookmap. And I agree. Like once I've started using Bookmap, I have never been able to stop because once you see the volume, you see the key levels to trade to, trade from. I mean, you can see the liquidity pulling. So it's hard to unsee it. It's hard to give it back.
Right.
But when I'm looking at the market, I look at ES or if I'm looking at MES, why do I feel like there should be more contracts in the market? I think other people have said this to me too, Scott. They look at the COB or maybe they're looking at even just a straight DOM and they're saying, I thought there'd be more participants in the market. Am I wrong? Is that just a preconceived notion that should be broken? Or are we not seeing everything? Because I think we are seeing everything, right? So what's your thought on that?
Yeah. I mean, well, first of all, when I was a scalper, these used to be 1,000 lots up and down the book. It was 1,000.
That's what I'm saying. So wouldn't that be bigger people? Right.
And that's how I used to trade and protect myself, right? Because back then, I'll start with today. Today, if you see 1,000 lot in, which almost never happens, market runs up there, all of a sudden it turns into a 10 lot. You're like, oh crap, like you were going to lean on that. So that's how you used to trade, right? So if I wanted to
Mhm.
get short, if I looked at the order book and I saw 1,000, 2,000, 2,000 above in the offers, and I wanted to get short and I wanted to sell 1,500 contracts, I knew if I was wrong, okay, well at least I can get out on those contracts that are sitting there because they were
Right.
real. Nowadays,
Right.
they're, even if you see them in there, the market comes up and they disappear. So it's just a vacuum. There's nothing there.
Which goes into maybe some spoofing, right? But they say it's not spoofing because an algo, what? It pulled the order. It got information that said not to fill the order. So is it? It's not. It's a gray area, right?
Well, it's not a gray area. It's spoofing. It's
No,
just they're
spoofing.
still
Okay.
doing it, right? It's supposed to be illegal,
Right.
but they're still doing it, right? They don't have the intention of getting filled. It's just,
Right.
that's the whole point. It's just big
Right.
games. That's what you're seeing on the Christmas tree that I was talking about earlier, right? Like
Yes.
this dude right
Absolutely.
here, whatever algo this is, had no intention on getting filled. They're trying to like whatever game they're playing. And I don't know. That's another thing too. It's like you're never going to know what other entities are doing. For instance, like the buy ice here, right? So this was buy ice. Normally that would hold the market. It blew right through there. That was giving you information. But the point is, you don't know. The thing I always get is, or even when I first started showing this stuff, 8 years ago on Bookmap webinars, they were like, well, you don't know if this entity is hedging or getting out of their shorts, or if they're hedging options. And I don't care. I'm never going to know unless I'm God Almighty or I'm sitting next to the guy putting this order on. Why waste your time? This goes back to you're too smart for your own good.
Right. You don't
Stop
need to.
worrying
You just
about
need
it.
to know it's there. Right.
Right. It doesn't matter. It's identify the area, understand how the markets trade around these, how they move away, and you get big moves because of the intense volume in those areas. Somebody's right, somebody's wrong. And the other thing is, and this leads me to the scalp trade that we take, how the
Mhm.
markets come back to these volume events with ridiculous regularity. So how this trade was born is I used to remember I was showing you the bark trade, the blind ATR retest confirm. So I used to
Yeah.
wait for almost all my trades for that same pattern where it would move away in the ATR, it would come back, move out, and then I would take the trade. Right? It was just a
Right.
better way to get in the trade where it was more secure. For trade lingo, not much is secure, but it was just a nice
You
pattern.
know where your stop is. You know your risk. It's better
Right.
structure. Yeah.
But then I started to say, so we were reading Trading in the Zone by Mark Douglas, and at the end of the book, he talks about taking any edge you think you have and then building the strategy around it. So I said, you know what? If I'm always waiting for these markets to, and I would literally say, I didn't have the stats at the time, I would say these markets retest these zones at least 70% of the time. It's closer to 80% of the time. I'm like, well, why am I not taking advantage of that 80% retest while I'm waiting to put on my position trades, right? So that's where the reversion trade was born, and that's where you're seeing all these dashed dotted lines. All they are reversion trades for these markets once they hit. And it's not a good example today because one of the cardinal rules of these reversion trades, you don't want to be taking them when there's heavy relative volume coming through because yeah, the algos reverted back to the volume event, and that's great. But when the big money needs to unload, you're going to get run over, right? But I can show you other markets here. I can show you every market basically I'm looking at with the volume event today. Most of them had a retest of the zone. So like here's crude, right? To the tick.
Yep.
So all you're looking at here, so this is my zone drawer. You can get this in the Bookmap marketplace, right? And it draws these volume
Hmm.
events that we've been talking about. So all these lines are, the blue line is the current ATR. Actually, I don't have it up. You can see it there too. The blue line is the ATR. This is my entry line. So when I do want to enter a position trade for most of my trades, I will force it to push an ATR out because then I don't get algoed as much, right? Remember I was saying, if it has the power to push out. So I go in ATR plus 15%, and then I'm in. But I'm just explaining what these lines are. The blue line is the ATR. That's my entry. Then you get into these reversion lines. So this first one is the one ATR reversion, and it's in front of the ATR because these algos love to snap it back right in front. And this is a perfect example. This thing touched this ATR. You would literally you'll see 100 of these a day across markets if you're watching.
Yeah, like 3 times right there, 4
There's
times.
your
Right
ATR. Touch it exactly.
Mm-hmm.
Back to the zone. It did one of these, but it did finally come back before you get stopped. Yeah. So that's the entry for the one. This is the stop. So the dash dotted is the stop. I watched the 1, 2, and the 3. So you can see. So then the 2 is up here. Here's the 2 stop. The 3 is up here. Here's a 3 stop. So that is the closest thing, in my opinion, and I've been trading for 25 years, the best if you want to scalp, if you have to scalp, and there's so many of my traders taking these in my trade room, and that's great because they're unbelievable. That's the best way to scalp. And is this find?
Right? Is this often with or against a VWAP? Do you know? Because we do a lot of VWAP. I talk to a lot of VWAP guys on the podcast. Like, because this trade to me, depending on how VWAP could be, you could be trading this with VWAP or back to a VWAP.
Right. Right. And I haven't done studies on that per se. Like if we're under VWAP, is the are the short reversions better, or is it better if it's coming back? But this is what I try to tell my traders all the time too. It's like, these are my strategies, right? It's not to say, especially once you understand these volume events and understand. So you're a perfect example right there. If you understand these reversion trades, you can have 50 things going off in your mind right now. Like, wow, that looks great. I wonder what that does at VWAP. I wonder if just like you're doing. So it's not for me to say, and I even tell my trader members, like, you don't just come in and just trade all my stuff blindly. Yeah, when you get started, you want to till you know what's going on. Then put your own spin on things. Right?
For sure. I mean, I got a guy in the group right now that's crushing it with the reversion trades, and he's scalping to VWAP and from VWAP sometimes. So it's, really going both ways for him. Do you find in your years longs are better than shorts? Like, do you trade long better than short, or it doesn't matter to you?
The reversion trade, it really doesn't matter. What we have been doing, so we traded these reversion trades aggressive, we would call them, for literally the last 2 years up until very recently with these GEX levels, where the minute it touched the reversion, like you could be standing in front of a freight train, you get in and you're just hoping it comes back. Now we have another trade. It's called the back in black. So again, this is all of my trading strategy stuff here. You go down here, the back in black. Take the 1, 2, or 3 backdoor reversion entry after the market touches an important area and begins to move back through the given ATR. So it doesn't have to be a GEX level. It could be, say you were watching VWAP and you said, okay, here's VWAP. I'm going to wait for it to hit touch VWAP, and then I'm going to take the corresponding ATRs. The even better ones are off these GEX levels, because remember what we said, these dealers have to hedge at these levels, right? So the market will come up to these levels, bounce off. You already know you get the help of the dealers. Then you have the ridiculous algo propensity to come back to these volume events. So now you got like all these things working for you to come back to the volume event. You know the dealer is going to be hedging, and then you have the algo. So you just wait for it to tag an important area, and then you take them. This way we call them backdoor. You take them coming back to the zone. There was actually an awesome one. It was right when I started my webinar. I'll even show it to you how ridiculously quick this was. And I missed it. I was like looking at crappy ES, and I missed, like, look at this guy. This one hurt.
You're a NASDAQ guy. You're not an ES guy. Even though ES is where you made the millions, you still go to NASDAQ now?
I'm any market that I'm getting these volume events, right?
You're like, I don't discriminate.
Right. I mean, here, this is just quickly. Look at this. I mean, I don't care. Some markets don't have events today, but most days, most markets do. And I'm talking all the way to lean hogs, and there's not today, but most days there's something in hogs, or there's something in cattle, soy meal.
What about Asian session? Will you get Asian session and get back to your DAX stuff? Will you get London session volume events? Yeah, right.
But not in those markets, because the CME is the only one that shows the stop.
True.
Enhanced data, right? So the point is, like, even like Bitcoin. Let's see if we get. Oh, did I not have it up? Because I switched much. But Bitcoin, Ethereum, the futures, you can trade the cash market based on what you're seeing on the stop iceberg information in the futures. Sure. You don't even have to trade the futures, right? So anyway, before I just want to complain here real quick.
Yeah, show me this trade.
How ridiculous this was.
Yeah,
I mean, it was instant. So I was going over something else and I missed it. I went short. Did I go short this? Was it here? Yeah. Remember I said I went short. That was after.
Yeah, that was the market this one. Yep.
Came down. I mean, look at this trade. Bounces right off the high volume, whatever this is called. Again, I don't even know what some of these names are. I just know there's a damn line there, and it's a huge gamma area. This thing bounced off. Here's the 3, the 2, the 1, right back to the zone. You're out of the trade. I mean, we're talking, this is like from the 3 ATR. This is, then the other thing too is what
big reversion.
The reversion trade, right? So this is the other thing you need to know too. So again, this is my Discord room, but if you go over here, so my moderator did these. So you got. This is a trade for you, real quick. Let me put this on. I just hope there's not. I hope there's some good relative volume, or not good relative volume coming through, because I don't want to get smoked on this. I'll go over this trade if you want here in a second.
Yeah, let's do that after. The only thing that came through on the news, U.S. is hitting brakes on flow of arms to Ukraine. Wall Street.
Well, the thing is, it's every 5 minutes you can hear we got tick extremes.
Right? Ideas every day. Yeah, right.
Right. See how it's tick extreme. So something's hitting somewhere. Just because it's tick extreme doesn't mean there's a news story. But lately, it's been ridiculous. So I'll get into that complaining here in a second. But here are the break even, the risk reward for the ATRs, right? So if you take the 1 ATR, and you would think like this is just a silly trade, like what? Because everyone's all wrapped up in the R thing, right? So for the 1 ATR, remember I said it's in front of the actual ATR, so it's like 90% of an ATR. you're risking 1.5 to make one. You would think like, what? You have to be a 60% winning trader just to break
And still make money. Yeah.
This one, yeah, but it's at least 70. It's like between 70 and 80%. And I'll have more perfect stats on this because the trading firm I was telling you, they're running this automated. So the one, if you're taking the ones, and this isn't the back and black, these are just the aggressive. 150 contracts. Right, so stuff coming in right now too. The 2 ATR, you get this one.
Wow.
This one's better. It's a 1.38 to 1. So you're only risking one to get one. You only have to be a 42% trader on the 2 ATR, right? Yeah. And then the 3 is 1.95. So it's a 2-to-1 trade. You want it to be 34%. That's all.
How do you know which number to trade? Like, what if it blows through the 2 and you go to the 3? You know what I mean? Are you trading personal accounts or are you trading prop accounts? Do you do any of the prop firm stuff, Scott?
Yeah, I do. So Apex is the one that I've been using for years.
Nice.
I have all these, and this is exactly why I use them, because I just made a mistake there, and I didn't even know I had the damn position on, and I just lost $5,000 on that trade, and this was a live account. So just to show you how pleasant this was, I don't know what the hell I was doing here. I didn't even know I had this on.
Oh, on your favorite asset too.
Yeah, I don't remember. So again, this is why I use the Apex, because this real money, this is upsetting to me. But like, if this was my living expenses and I just threw away $5,000 because I'm on the webinar,
it sucks.
I'd be breaking a screen right now. So
no, the prop firm stuff is amazing. It's good to hear. I'm sure people that have listened to this episode this far in will be like, this guy Scott, he's been trading for so long, he probably hates the prop firm stuff. No, so it's refreshing to hear that you actually like it.
Especially as you, like you say, you wanted to learn this stuff, right? Especially as you're learning this stuff, go to a prop 100%. Firm, right? Or go to the Apex is the one I put my name behind, and you do it. You have less. You have some skin in the game, right? So it's like you're risking something, but so you're not, because a lot of guys, if they go sim, then they're not reacting the same way. Well, here you got your real money in and you get discounts. So I got my code too. Use Pulcini 50 for the code. You get the discount. But the point is, you have to make the profit goal before the trailing threshold. So it teaches you how to trade. But if you're working on your trading or new strategies, you can qualify while you're practicing, right? So what is going on?
Absolutely. There's something. Yeah, see what's going on first before I hit you with a couple more, and then I'm going to let you go.
Okay.
And we'll pull the screen share back too.
I can't believe I just did that. I don't even remember what the damn word. So guys, you can see how easy it is to make. I mean, I've been trading 25 years. I'm on a webinar and I just have to show you, I just had a $6,000 mistake with a real account. It's like, that's how alert you have to be with what you're doing, right? It's like,
I'd say that all the time.
Yeah.
Focus is so important.
I have no excuse.
Blame me, Scott. You can blame me in the podcast. That's fine.
I blame myself.
We'll chalk it up to me.
There shouldn't even be a damn order in the order book coming on the webinar. I don't know.
If I'm being honest, that Trade-Evate platform is not the best for that reason. I have people do that mistake all the time, leaving orders on and getting filled. And they're like, what? I didn't mean to be in that. But let me ask you a couple more things, Scott. This has been amazing. The masterclass is amazing. You are the Bookmap master, bro. You're the big guy at Bookmap. That's what everybody loves you for. Before I get you with the last couple of questions, I'm going to have your website link below and everything like that. How often are you streaming for Bookmap? Is that a weekly thing now?
Yeah, I've been doing every Thursday for the last 7 years. So cool. Bookmap YouTube, Bookmap Discord, 9 o'clock.
Discord, yep.
And I literally just do what we're doing right here, where I'm actually putting on the trades. I'm explaining the strategies, whichever one I'm taking.
Dude, you can tell you're super comfortable doing this. You know what I mean? So that's why I don't want to take too much of your time too, because I know you're going to look for trades this afternoon. Right. So when you think back to the beginning, this is what people love to hear, Scott. Any interesting stories from the days at Smith Barney? Any interesting stories that you can say? You don't have to name names, but anything crazy. The guys that listen to this show, they love the crazy trader stories from the days, before technology, before we were all tippy tapping on our keyboards at home, when everybody was really cursing and screaming at each other, stabbing each other with a pen or whatever it may be. You got something for us?
Smith Barney, no. I mean, talk about boring. You're sitting there cold calling people all day to buy some mutual fund in Iowa.
That's super boring. You're looking forward to lunch. That's what you're talking about.
Right, exactly. That's why I left that side of the business. Now, I'm not saying it's bad to be a financial advisor. It just wasn't for me, right? The trading firm stuff, that's where all the stories were. Again, I used to be a big trader, and I would go against this other guy. I don't even want to mention the firm I mentioned earlier, but I'm not even going to get into it. If you Google the firm I mentioned earlier and Google the guy that's been fined, you'll know who I'm talking about. But we used to go head to head every day. And remember, I was telling you back then, you could see counterparties. So he can see, and I could see when he was loaded up, I was loaded up. Well, I could put on 3,000 contracts. He could put on 6,000. So when he knew he had me, he would just run the thing against me. Again, this was always around that time of day too, because he knew there was no one in there to stop him if he starts throwing huge size in. He would blow me out of the mark, blow me out. I mean, there was days I would lose. I had 2 different days where I lost 800 grand in minutes, back-to-back days, a month apart. So, and I was supposed to have, we want to get into the risk management side of things, but I was supposed to be stopped at 100 grand. I was supposed to stop myself. My trading firm was supposed to stop me too. Neither did. And both times I lost 800 grand. That's a whole nother story of how traders need to really respect their risk levels for the day. But anyway, there was this one day that he did it to me again. I lost like 300 grand in 8 seconds. And Dr. Brett, that's what I was telling you guys. If you could look at my website, I'll just show this real quick, my little plug. But if you go to my website, you can see here, this was my, I'm in this trading book, Enhancing Trading Performance. So Dr. Brett's like one of the top psychiatrists, trading psychiatrists.
Oh yeah. I don't know. I've met Bert Steenbarg. He's the man.
Yeah. So you can ask him about this story. He was sitting behind me this day because he asked when he was writing this book, can I sit behind you to see what makes you such a incredible trader? And I said, sure. So he sat behind me for almost a year while I wrote the book. So the one day this guy ran me over, I lost 300 grand. I literally was I was leaving the office. I was so mad. I was literally going to kill the dude. Because I mean, I had enough. I had lost like up to that point, 2004, I was down like 1.8 million bucks or something. I made it all back and made 1.6 by the end of the year. But at the time it was not looking good. And I was on tilt and I got up to leave. Him, Dr. Brett, and the owner of my trading firm had to physically accost me at the door so I would not go kill this guy at this trading firm, right? So that's how intense it would get, and that's how much money was on the line back then. So that's just one of the stories.
Crazy. But now to bounce from that, to make it tangible for the audience, how do you bounce back from that? That is a crazy story. What does the bounce back look like? Come on, that's Tiger Woods thing right there, where he says it doesn't matter what you achieved that determines your success. It's what you bounce back from. Not many people could do that, Scott. People go make millions of dollars selling software. Not many people can lose it and then go get it back and then end that year profit. Like, that is crazy, bro.
Right. Well, absolutely. I mean, I'm not going to pretend like it didn't bother me. I mean, well, that's the other thing too with respecting your risk levels, because like, you know, the back-to-back $800,000 days, and it's fine. It's not fine, but doing it once is one thing. Doing it again a month later, there's no excuse. Kind of like there's no excuse leaving the orders in the order book during this webinar. But the point is, like, I would go home and I would wake up the next day and I would just be like, what was I thinking? Like, why would I just not stop? Like, there's always another day to trade. There's always another trade. Like, there's no reason to blow out your account on a day that things aren't making sense, because you're going to have many days that don't make sense. Cut your losses and just be done with it and move on to the next day. There's always another day. There's always another trade. So that was the main thing, where I would wake up the next day fresh and I'd be like, and I'd be in my right mind. And I'd just be like, what was I thinking? Right? Because when you go on tilt, you become a person you don't know. And the more money it is, you will not believe. I can see people on here being like, what? Trust me, you turn into someone that you didn't even know existed. Right? So I'm not going to lie to you, but I was a younger guy too. This was like when I was 30 years old. So I was able to bounce back because I knew, and that's the same thing with an edge, right? So if you have a bad day, you're going to have bad days. You're going to have bad trades. If you have an edge, you just know, okay, I'm going to let the odds, the probabilities play out. I just keep putting on the trade, monitor my risk, and I know I'll make money. So I knew I would make it back. It still didn't feel good, but I knew I still had the edge. It didn't just disappear because I had one losing day. And that's how you have to approach any edge that you have, any trades that you have. Some days, you're going to get news headlines like what's going on right now. It's right. And you're going to get killed. You just have to know, okay, over the longer series of trades, I have an edge. I'm going to just keep putting on my trades and I know I'll be a winning trader. Easier said than done, but that's why you need an edge with rules. And if you have those, then you're never like freaking out. You're just like, okay, remember I said like I didn't put the trade on earlier in the ES. I'm like, as soon as I saw it, I see an event, now I'm ready to go. So I'm not forcing anything. I'm just waiting for my opportunities.
That was the perfect rant, I think, to end us with, Scott. This has been an awesome hour. I hope that you'll give us another part 2 at some point. I think people are going to want it. So I think whether it's for more Bookmap stuff or for more stories, they're going to be like, Austin, you should have asked that question at the beginning. That was such a good little tidbit there. But that was great, Scott. So I'm going to send everybody to your website. Anything else we should send them to? You're going to be in Discord. They'll find you there. They'll find you on YouTube. Website's the main thing, right?
Website. And then, if you want the Bookmap, you go to Bookmap Marketplace, and that's where you can get my course. It goes over, and you can get it from my website too. It goes over the 6 distinct setups. Remember, I was saying Dumb and Dumber, double whammy.
Yeah. Yep. And if you're interested in this, we have two of the guys in the Black Shirt Club in our group that are in this and crushing it and loving it. So we definitely green light this.
Right. So this is the course here. Again, it's 2000. It's the same course. 2000. It still applies to this day. I'm doing the same thing. 2023 to 2025. And then this is the zone drawer. This is like a subscription base. If you get the basic, it's just showing you the ATR and the entries and the exit. If you get the pro, and it even says right here, the pro version, it gives you your risk. It gives you all those reversion lines I was talking about for the scalping trade, so on and so forth. So that's if you want to get the stuff drawn, because I drew these by hand for 7 years, and it's not fun. You can draw these by hand. You got to map out where this happened and draw them out. It's so much better to get this because you can see it.
Oh yeah, you have to have it on everything. You have to.
Yeah. It's awesome.
You can't be doing it by hand anymore.
Right.
No, but this has been great, Scott. I really, really appreciate it, man. I'm going to let you run. Everybody, links in the description. Connect with Scott. I'm sure we'll be seeing him again soon. Scott, thank you, buddy. Really good to meet you.
Thanks for having me. I appreciate it.
Absolutely. All right, everybody. We'll see you in the next episode. Make sure you're subscribed.